There's a fundamental flaw in how our industry thinks about growth. For the past 2 decades, I've watched advisory firm after advisory firm chase the same prize, moving up market. From serving $1 million clients to 5 million, then 10, then ultra high net worth. It's the path of least resistance. Fewer clients, higher fees, easier math. There are so many consultants in the industry who will tell you this is the way. But what if I told you there's a $9 billion RIA that has deliberately chosen the opposite path? A firm that has built their entire business model around serving the mass affluent and has achieved 20 to 30% organic growth year over year for nearly 2 decades doing it. This challenges everything we think we know about profitable growth in wealth management. I've been fascinated by pure financial advisors for years, not just because of their size or growth rate, but because of how they've fundamentally reimagined what it means to be a financial advisory firm. They've taken everything the industry considers gospel, that advisors must be rainmakers, that you can't profitably serve smaller clients, that marketing is an afterthought, and flipped it completely upside down. When I first encountered Pure Financial, I couldn't really reconcile what I was seeing. Here was a firm spending double-digit percentages of their revenue on marketing when most firms spend less than 2%. They've built a media empire, an educational platform, and a systematic approach to business development that generates 2,000 new clients a year. And they're doing it all while paying their CFPs salaries to focus purely on advice, not sales. But here's what really caught my attention. Their CEO, Joe Anderson's visceral reaction to the traditional advisory model. When he calls the eat what you kill approach terrible and miserable, he's not just being dramatic. He's describing a broken system that leaves talented CFPs struggling to survive and mass affluent families underserved by an industry that just doesn't think they're worth the effort. Pure Financial represents something rare in our industry, genuine structural innovation. They haven't just grown within the constraints of how wealth management should work. They've rebuilt the entire model from the ground up. Growth Leaders podcast tells the stories of advisory firm founders driving differentiated growth. And in today's conversation with Joe Anderson, CEO and President, and Jason Carver, CFO and Managing Partner, you're going to hear about a business that chose to serve those who need help most, built a career path that actually works for CFPs, and created a marketing engine that would make any technology company jealous. This isn't just a story about scaling to the mass affluent. This is about what becomes possible when you have the courage to completely reimagine your industry. What you're about to hear represents one of the most systematic challenges to traditional wealth management I've encountered. In 2007, when most advisory firms were chasing higher minimums and wealthier clients, Pure Financial made a radical choice. They would build their entire business model around serving the mass affluent. Even more unconventional was their decision that the firm, not the individual advisors, would be the primary rainmaker. Today, that startup has grown to nearly $9 billion in assets under management. I'm speaking with CEO and President Joe Anderson and CFO and Managing Partner Jason Carver from their impressive broadcast studio in San Diego, which is in and of itself a testament to how seriously they take their role as financial educators. Their approach challenges fundamental assumptions about how wealth management firms should operate and scale.
Like you said, we started the firm in 2007. We really didn't bring our first client in until 2008. The vision and the mission of the firm was that we wanted to build a very high-level, comprehensive financial planning platform that we could scale to the mass affluent. We found that individuals looking for good credentialed advice had a tough time finding an advisor that had certain minimums. Like, as you get in the business, you might start at 500,000, then you go to $1 million, $2 million, $3 million, $5 million when you're an independent. And so we thought that there was a real need in that marketplace that could we give high level, high touch, comprehensive family office almost advice to that market segment. And so we wanted to build a platform. And secondly, and I think more importantly, where my passion lied, is that we wanted to build a real career path for the certified financial planner. We've, in my tenure, you see a lot of advisors not necessarily make it in this business. They're not really great salespeople. They don't have maybe the right networks. And so we wanted to build a career track where the firm itself would be the rainmaker. The firm would provide the marketing, the business development activities. And so advisors could join our firm and just deliver really good comprehensive advice. So that was the mission and the vision when we started the firm in '07. We started with 3 advisors, and we just filled them up, one client, one advisor at a time. Like you said, I think today we sit at about 9.1, 9.2 billion, 60 advisors with about 6,000, 7,000 clients. So it's been a cool ride.
I want to dive into all of those things
Sure.
because I think that you don't often hear that founding story, right? Particularly having an intentional desire from day one to scale to the mass affluent. Even today, it's 2025. Most advisory firms are looking to continue to go up market. It's one of the challenges that we're solving for our clients often is how do I go from high net worth to ultra high net worth for reasons that we understand, right? When you're thinking about how advisory firms are built and the economic model behind it, you understand it. You didn't do that at Pure. You started with that intentional focus on scaling to the mass affluent. Did you have experience with that, Joe? Like, did you guys know at the beginning how to build that platform, what it was going to look like from a tech perspective, operations perspective, like the type of platform that you would need to be able to do that profitably?
No. To be totally honest with you, I think there's flaws in the marketplace itself, in the profession. You see a lot of RIAs don't necessarily grow because a lot of advisors, there's different stages in an advisor's life cycle. Once they get to a certain book of business, it's like growing a practice is very difficult to do, right? You're significantly underpaid and you're overworked for the first 5-10 years in the business, and then it's like, okay, now I can calm down a little bit, have a little work-life balance, and I make a pretty good income, and now I'm just servicing my clients. And I think that's why all these advisors just want to continue to go up market. Why do I want to bring on 10, 15, 20, 30 more clients at $1 million a piece when I can bring on 2 or 3 new clients at $5 or $10 million? It's a lot less work, and the compensation is roughly the same depending on what that fee cycle is. And so I think in the industry itself, you see organic growth is almost zero or negative in a lot of firms because why would they want to continue to grow when they already have a very successful practice? So with us, it was different because we wanted to be the rainmaker, the firm itself, and we wanted to help advisors that wanted to help people. So, our first advisors, they were like, hey, I don't care if they have AUM. I just want to make sure that, we can do a budget for them. I mean, those are the type of the CFPs that we have that are really into the weeds in regard to the overall financial planning. And we paid them a base salary. So we didn't have to force them to sell, or we didn't have to force them to, hey, knock on the rainmaker's door and say, hey, get more business. The firm itself produces a lot of a heavy volume of interested parties. And so as we thought about building the platform and tech and everything else, we're still building this rocket ship as we're growing, right? So when you grow at 20, 30% organically, once we hit 100 million, I was like, man, we hit we're good. And then all of a sudden you hit $1 billion, and then now you're at $2 billion, $3 billion. Now we're knocking on $10 billion door. I give Jason all the credit.
Yeah.
He
Exactly.
he's building it now.
I deserve all the credit. No, I think the one thing I would say is I think a couple of founders did have experience in serving the mass affluent, but it was from a product or a commission sales perspective. And so I think that's where me joining and learning about the history and kind of the mission of the business was there's this whole group of people, this whole segment of clients that probably have the biggest need, right? You're talking about people that have $500,000, $1 million, $1.5 million, who can't afford to make mistakes, yet they're getting sold really bad product in order to try and solve their needs, and it's not working in the marketplace. So the business that was really created on the mission of helping these people that needed the most help, but in a fiduciary, fee-only, planning-oriented way.
The challenge Pure faced was immediate. How do you actually reach the mass affluent market that Joe identified? Having a mission to serve underserved clients is one thing, but building a marketing engine that can consistently deliver qualified prospects is entirely different. Most startup RIAs rely on the founders network and referrals. But Pure needed something more systematic if they were going to make their advisor salary model work. What Joe describes next reveals the experimental test everything approach that would eventually evolve into their sophisticated marketing operation.
Well, we tried everything and anything. To dinner workshops. You feed the people the chicken dinners, and we got a couple clients from that. We networked with a ton of CPAs, but I think we were on an AM radio show from the beginning. So Big Al and myself, back in 2007, we were. We launched with an AM show here in Southern California in San Diego. So that was probably half of the inbound leads that came in. And then the other half was we were trying everything and anything from adult education workshops, seminars, webinars, the chicken steak dinners at the restaurants, to just we were doing CE credits for CPAs. I mean, all the regular stuff that people do. So it wasn't rocket science. I think of the things that we're doing. We just did a ton of it. And we just kept testing and trying different things. And if things worked, we just doubled down on it. And if it worked again, we would just continue to double down. So nothing very unique in the marketing or the activities that we do. But I think what is unique with us, and I think a lot of other larger firms are doing this as well, is that you have a marketing department that generates the leads, that creates the different campaigns. But then we have a separate segment of our business development team. So those leads don't go to our advisors. Those leads go to a business development team that are going to nurture those leads. They're going to call, text message them, email them to set those appointments. In the beginning, that was me, right? We would do a workshop, and then the next morning I'm on the phone. We're calling them. We'd get all the leads from the radio show. Then myself and, another person would call those as well. And so like each of these different departments started with one or two people. And then now we have, several different departments that have, our largest department has about 30 people in it. So, but it's just rinse and repeat. Let's find out how to get really good at this certain segment in the overall business and hire experts in that area. So again, our advisors can just focus on the client.
Yeah, I think the other thing that's really unique that even some of the larger firms that we've met don't do really well, where I think we do it really well, is the tracking of the activity. What are we doing? How are we tracking the success in those and what are the metrics within those activities, and how are we tracking that, and kind of how are we testing it against those metrics? And so, at first you don't have any metrics to benchmark against, but as you build it, now you're starting to track those metrics, and you can say, all right, well, we did this way, and this was our success rate in getting clients in the door, and then them showing up, and then us being able to sell them or get them to do financial planning, and then become a long-term client, AUM client. And then, hey, that worked this way. Let's try it this way and see if we get the same results. So it's that constant testing and activity tracking that really allows us to see kind of where the dollars are being spent and what that ROI on those dollars being spent.
The data-driven approach Jason just described, constant testing, rigorous activity tracking, and measuring ROI on every marketing dollar, is exactly what enabled Pure to achieve their remarkable organic growth rates. But by 2021, after more than a decade of 20 to 30% annual organic growth, Pure faced an interesting strategic question. When you're already succeeding at organic growth, why would you add the complexity of M&A? The answer reveals something important about how sophisticated growth leaders think about scaling. They brought on Jason specifically for his M&A expertise. Not because organic growth was failing, but because they saw an opportunity to accelerate what was already working.
I think two things is that most of the offices that we build has been de novo. So we've started with one advisor, and we continue to build and grow that office, and then we hire advisors, fill them up with leads, and go. And so it takes a long time. We're planting seeds and letting those things grow. I think for inorganic growth with us is that could we get into another geography quickly that already has a foundation, that has some talent, or maybe they had, I think our first couple of deals, they were retiring advisors. They wanted to get out of the business. So we could hire advisors. We could help peel off their book, give it to the younger advisors, turn on our marketing within those markets, and take a $200 million practice and double it in a couple of years. And so I think we're very selective on the inorganic side, and I won't steal Jason's thunder, but organic growth is really in our DNA, and that's our culture. And if you look at high-paced, growth-oriented firms, the inorganic growth is just embedded with us, and we don't want to lose that. And so when you look at doing a bunch of inorganic deals, you're bringing other firms and other cultures in, and so it's been a little bit of a challenge for me of how to think about that and what is that integration process and how do you turn those advisors into really high growth, fast paced advisors when they've already kind of built up a certain level of practice. So the good news is that we don't have to do a ton of inorganic growth. But the bad news is that we got to shift through a lot of different firms to find truly the right partner for us.
Yeah, I mean, I think a lot of firms in our industry take on private equity for two reasons. One is for liquidity purposes, succession purposes, and then two is because they want to do M&A and inorganic growth. For us, that the inorganic growth wasn't necessarily the driving factor. I mean, I joined because of my background in doing M&A in the industry, and so yes, we wanted to do M&A, but it wasn't like we can't grow organically, so let's do inorganic growth to supplement. It was really more about complementing our organic growth strategy and using inorganic growth to continue to accelerate our organic growth. So again, we want to be selective with inorganic growth, but it wasn't the capital partners coming in. The thesis wasn't okay. Let's turn Pure into an M&A machine. It was more let's continue to help them grow organically, and if we can do some selective M&A to complement that organic growth and then help accelerate the organic growth, then obviously we want to execute on that too.
So that makes sense. It's like inorganic when right to augment the incredible 20 to 30% organic growth rate that you've enjoyed since the firm started.
Yeah, exactly.
Let's talk about today. Let's talk about when you're doing your annual planning and you're looking ahead to the next year. How do you, as members of the leadership team, talk about growth and drivers of growth at the firm? Like, how do you sort of put that together? How do you forecast? What are some of the conversations that you have when you're looking ahead and thinking, okay, we ended last year at $5 billion and now we're going to end at $9 billion. I mean, do you predict that? Like, what are those conversations like?
Yeah, maybe I'll start. I think a little bit of it is tops down and a little bit of it's bottoms up. So from a top down perspective, we look at, hey, what do we think we can grow at? How do we continue to grow at the pace that we want to? We've been growing at 20-30+% organically per year since basically the beginning. And so we want to continue to grow at a high cliff because, again, it goes back to our mission. Our mission is to provide financial education and advice to all those in need of it. And so we want to continue to grow to impact the lives that we know we can impact, both from a client perspective as well as an employee perspective. And obviously we know growth creates opportunities across the board for everybody. So from a tops down perspective, we're saying, okay, we grew at X% last year, or we added X billion in gross flows or net flows last year. Can we replicate that and pour more gasoline on the fire? And then from a bottoms up approach, it's we bring in advisors, 5-10 advisors per year. How do we continue to feed them? All right, we make certain promises when we bring on advisors that, hey, we can get you to a certain level of AUM, revenue, and income faster than you can. I think our goal is, $100 million in assets in 2 years, $200 million in 5 years, with an advisor joining us with no book of business. It doesn't mean they're 22 and have no experience. Typically, we're hiring somebody with 10, 15, 20 years of experience. They're just coming from an environment where they don't have a book to bring with them. And so we basically can build an advisor up from scratch to those levels. And so in order to hit those levels, we need to make sure that we're growing at a certain pace.
Yeah, we look at the capacity of the advisors that we have. We can probably fit 250 meetings with a newer advisor. So we look at, all right, well, where are the advisors that are taking on new clients? So we have senior advisors that are basically just getting, referrals, servicing their existing book. And then we have growth advisors, and then we have brand new advisors. And so each of those have a different capacity level. And so we look at the advisor log and we're like, all right, well, so many appointments are needed with the existing clients without hiring anyone. And so we can back that out to how many leads that we're going to generate. What's that marketing budget? What's the cost per lead? What's the cost per scene appointment? What is the cost per acquisition? What's the cost per million dollar revenue? And so we kind of factor all of that in too. And so we're like, all right, well, we need to get these advisors to a certain level because they come in with zero book. And so we're going to pay them a salary. They need to get to that J curve fairly quickly because we're also putting in a lot of money into marketing behind them. So, I think also marketing in lead generation is one thing. And I think anyone can basically generate leads today. You just call Michael Carvin at Smart Asset, and he will gladly sell you a bunch of leads. I think where companies, in where we've been successful, is a very well-defined sales process on how we're bringing these people through a prospect to a long-term paying client. And then some advisors have certain skill sets. And so you could give one advisor a certain level of opportunities, and they're going to get there a lot quicker than another advisor that might take them a little bit longer. So you have to kind of bake that into the cake as well. But, there's a lot of different metrics that Jason and I, it takes us a few weeks just to kind of digest everything of, all right, well, where do we want to go? How do we feed our existing people? And then from there, then we're looking at, all right, well, what type of percentage growth rate do we need? But it kind of starts with home base. Hey, let's make sure that we fulfill the promises that we did. How much is that going to cost us in marketing? And what is that a percentage of revenue? And what is that going to equate to in AUM? And then from there, it's like, all right, well, let's continue to add more, gas to the fire. Let's hire X amount of, more team members. And, we plug in a certain dollar figure for M&A, but it's significantly less than the organic number.
The level of sophistication Jason and Joe just described in their growth planning is remarkable. Most advisory firms forecast growth based on hope and rough estimates, but Pure has built a mathematical model that accounts for advisor capacity, conversion rates, marketing spend, and even the J-curve timeline for new hires. When Joe mentions it takes them weeks to digest all these metrics, he's describing the kind of analytical rigor that separates truly scalable businesses from traditional advisory practices. But all this planning is only as good as the execution behind it. I wanted to understand which of their marketing channels were actually delivering the results that make these promises to new advisors possible.
Talk to me a little bit about the channels that are performing the best right now for Pure, because you really are across all channels. I think you mentioned in the beginning sort of doing the, the dinner seminars, but I see those workshops still being advertised on your website. You've got multiple, you're on YouTube, you've got multiple podcasts, you're doing a ton of content creation. You're working with Smart Asset. Are there any channels that are outperforming others? And I know that it's cyclical, so I'd be curious to hear what's changed.
Yeah, we have 4 verticals of marketing. And so the first one is our educational arm. So we teach workshops that are, hour and a half that are free to attend. We teach long form classes that people actually pay to attend that are, over 2 nights, 6 hours. We have a lot of digital type classes, webinars that we're doing, and then, the content that we create from an educational perspective, white papers and guides and things of that. So we have that vertical. I would say that's probably 20% of new client acquisition that comes in. The second is our media brand, so the Your Money or Wealth branding. So we have a TV show, we have a podcast. We do a lot of different types of events and content creation, I guess, via video through that vertical. That's probably another 20% of our overall business. Then we have digital. So we create a lot of leads online ourselves through the different content that we create. We partners with great people like Smart Asset, DataLine, Wiser Advisor, and so on, advisor.com. And then the final channel is just kind of the standard centers of influence, referrals, share of wallet, just keep the clients happy and keep them in their seats. So as you kind of take a look at that, ironically, referrals is probably our lowest, or at least probably the same as most of the other channels, where I think a lot of other firms, referrals is the only way they get new
highest, yeah.
business, right? So I would say, across the board, it's funny. During COVID, our educational arm produced zero. So that's why we leaned in pretty heavily on digital, just because we made promises to our advisors that we had to continue to get people in front of them. And then as now, over the last couple of years, our educational arm is doing quite well. It's it's hit or miss. It's like a portfolio, right? You want to make sure that you're diversified. You have different segments, so you're not tied to any particular area. And so if digital goes a little bit dry, we have the educational arm. The Your Money or Wealth brand has done quite well, surprisingly. I thought, only 2 people would ever watch this. It would, Big Al's mom and my mom. So, but, we get a lot of downloads, and we got a lot of people that enjoy the content there. It's like we take the business pretty seriously, but we don't take ourselves seriously. And I like to have fun and make fun of myself and we'll try to make finances fun. And I remember one PR firm was like, you can never use humor in finance. That will just completely blow up on you. So I don't know if you meant blow up in a good way, but I think we're doing okay.
It worked for you.
Yeah, it's working okay.
Tell me about the structure of your marketing team. Do you have a chief marketing officer that sits on the leadership team? Sort of how are decisions made from a marketing perspective, or who's responsible for marketing strategy and making decisions?
Yeah, you're looking at him.
You're looking at him. It's Joe.
Yeah. We have a great marketing team. It's 2 people and myself, to be honest with you. So we have a media team. There's 2 people on our media team. Aaron here, who's he's doing a wonderful job with these cameras. We got Andy Last that kind of worked with our podcast. We have 2 great marketing managers that kind of help put together the content. So, yeah, we're kind of small, lean, and mean. But I think there's a lot of other things that we can do. I think we're just at the tip of the iceberg. Like, we just produce stuff and throw it up on YouTube, right? I don't know. Is someone going to watch it? So we don't really necessarily have, like, a really well-thought-out strategy. So there's hope for us yet, Jason.
Yeah.
I think if we could, tie some of these things together, because for me it was always marketing is 1 + 1 equals 3 or 4 or 5, because they watch the TV show, then they go to the website and there's a class or a webinar, let me download this. So trying to find the appropriate campaign for some of our new clients is challenging, because we touch them in so many different ways. But yeah, we do a lot of it and we test a lot of it. But yeah, we have a pretty small, really talented marketing group and media group.
That's incredible. I would not have guessed that. If someone had asked me, what would you guess? I would not have guessed that, just given the significant amount of content that you produce. It's not easy. It takes a lot of time, and in diving through and pouring through some of the resources that are available and looking across channels. To me, it feels like, I think that your marketing strategy is just inherent to you, Joe. It's just like a naturally inherent thought process, because the content feels very clearly directed to an ideal client persona. Like, the messaging feels on point. It feels like you're speaking directly into the pain points of that audience, which, when I think about strategy in general, a lot of people like to talk about strategy. And so I always ask, like, well, how do you define strategy? When we're talking about strategy, give me a definition for strategy. And so I think of strategy as sort of an overarching concept that, with a series of components that a business can employ to meet their business goals and objectives. And so the same is true for marketing. And the components that go into a strategy are, at the business level, why do you do what you do? Who do you do it for? What is the change that you seek to create? And if you're clear on those things, then the marketing decisions are intuitive. So I feel like you do have a strategy. It comes through in the way that you produce content, and it feels like you know your target audience very well. And you anticipate their needs, you speak to their needs, you speak to them in the way that they want to be spoken to. You're on all the channels in which they are. You're nurturing them across those channels to build the relationship and trust in advance of meeting an advisor from Pure, but also then on a continuing basis as a client. So don't sell yourself short on strategy.
Thank you, Meg.
What Joe just revealed should stop every advisory firm leader in their tracks. A $9 billion RIA producing this volume and quality of content with a super lean marketing team defies everything we think we know about marketing resource requirements. But this efficiency isn't magic. It's what happens when your CEO is also your chief marketing officer and truly understands your ideal client. Most firms struggle with marketing because they lack the strategic clarity that Joe brings to every piece of content Pure produces. When marketing strategy comes directly from the founder who built the business model, execution becomes intuitive rather than tactical. This is why Pure can operate so efficiently. They've eliminated the translation gap between strategic vision and content creation.
I'd say there's trade-offs with anything, as with anything. Right, I think the pros and cons of the content that we're creating and how we do it is, people ask, like, what's your niche? And we don't really have a niche. Our niche is pre-retirees and retirees who need help in looking at retirement. So it's not like we're going after doctors or dentists or engineers. Yes, we have lots of those types of clients, but it's very broad-based, and so I think there's pros and cons to that. So to your point, I think there's a thoughtfulness around the strategy, but it's broad in its in kind of its concept, and there's certainly a lot of opportunity left for us to get a little bit more specialized in how we market as well.
Yeah, I think that as an industry, we have overused the niche marketing concept, and in the sense that the way that many people in the industry think of niche marketing is, to your point, Jason, like it's a profession, right? I work with dentists or doctors or engineers or young tech, whatever it might be. I think of an ideal client persona quite differently. I think about when working with a firm, your ideal client is the client that you already have that you would want to replicate. So if you were to look at the top 10% of your clients that just hit all the marks, if you could clone them, you'd have a wildly viable and profitable business. And then understanding them at the psychographic level. So understanding what their worldviews are, their beliefs, their opinions, how they make decisions, who they seek for information and advice, where they hang out, what they read, what they listen to, like that. That's when I say ideal client profile, that's sort of what I mean. That's what comes through to me in Pure's content, is that it feels clear. Maybe not, maybe you can tell me different, but I guess the way that I observe it as from an outsider is that the way that you show up, the content that you produce, what you say, your intellectual capital, your beliefs and your opinions are aligned with those that you seek to serve. And so that's why the content resonates. That's why they fill out the form or attend the workshop or pick up the phone or send the email, because, how you're showing up online and what you're saying is aligned to what they believe.
And that was all part of the master plan,
Yeah,
right, Joe?
yeah, I drew that up. 07. Yeah. No.
I'm just giving you your marketing strategy.
Yes, perfect.
Typically, on average in the industry, firms spend less than 2% of top line revenue on marketing. Does Pure spend more than 2% of top line revenue on marketing?
Yeah, I think we spend 2% a month.
Yeah, it's considerably higher than 2%, and we're spending double-digit percent of revenue on our marketing. Now, some of that is testing new things and trying things out and throwing things at the wall and seeing what sticks. But yeah, I mean, we are purposeful with our marketing efforts and how we spend our money, and to grow at the pace that we're growing, it does cost money. Now, I think a lot of firms rely on their advisors to be the rainmakers, and I think a lot of firms pay their advisors more than we pay our advisors because they're expected to rainmake. So the way part of the way we justify it is we're paying our advisors slightly less, but they don't have to rainmake. We're taking part of that compensation and reinvesting it back in the business through our marketing efforts.
Put this in perspective for you. Pure Financial is spending a double-digit percentage of their revenue on marketing annually. The industry average is less than 2%. So at minimum, Pure is 5xing the average industry spend. This isn't reckless spending. This is what it looks like when a firm treats marketing as the primary growth driver rather than a nice-to-have expense. Jason just explained the economics. They pay advisors slightly less than firms that expect advisors to rainmake, then reinvest that difference into the marketing machine that feeds those advisors qualified prospects. It's a complete inversion of the traditional model, and the results speak for themselves. After the break, we'll explore how this philosophy enables Pure to offer something almost unheard of in our industry: genuine career paths for CFPs who want to focus on advice, not sales. Are you ready to have more confidence in how marketing is driving growth at your advisory firm? At FICOM, we believe the best marketing-enabled growth happens when you have the right strategic foundation, when your marketing strategy aligns your purpose with who you serve and the change you want to create. That's our strategic framework, and I love that you get to see it play out in the stories you hear from every growth leader's guest. We serve as your outsourced CMO and marketing department using our proven methodology to help you achieve greater and more sustainable growth. Visit ficompartners.com to learn more. Welcome back. Before the break, we heard about Pure's extraordinary marketing investment, a double-digit percentage of revenue annually. Now I want to explore what that investment makes possible: a compensation model that separates financial planning expertise from business development skills. Most advisors accept the eat what you kill model as inevitable, but Joe saw it as a fundamental problem to solve. The traditional approach assumes that great financial planners should also be great salespeople, an assumption that Joe believes is not only wrong, but destructive to both advisor careers and client outcomes. What you're about to hear is Joe's visceral reaction to the traditional model, based on his own painful experience in the industry. His story explains why Pure was willing to make such massive people and marketing investments to create a totally different path.
No, there's definitely incentive comp. Yeah, our advisors make a really good living, but they have a different career path. You know, I got in the business in the late 1990s, so I've been 25 years doing this. I started at American Express Financial Advisors, IDS, back in Minneapolis. You know, you get a phone. I got an $18,000 draw. You're sitting in a cube. You know, it's like, okay, now what? I thought I was a financial advisor. You know, my dad, I didn't come from wealth. My parents didn't have wealth. I wasn't from the country club, so I didn't have a natural market. So you had to be, you had to hustle, you had to grind, and you had to figure out a way to get in front of people. And I think for me, it was like every time I got in front of someone, I wanted to make sure that I performed well. So I got really good at, understanding financial planning concepts. I wanted to be better than everyone else from just strategy perspective on what I could provide value to these clients, because I was competing against people that were a lot older than me. They had gray hair, that they have a lot more experience. And so I've always kept that chip on my shoulder, I think, too. And it's like, all right, well, here, that was terrible. I mean, some of the times were fun, but most of it, was miserable. I thought about quitting like every month. It's like, man, I love this business, but man, this business model is not fun. It sucks. Can I say that? So
yes, you can say whatever you want.
And so it's like, there's got to be a better model. We got to create a better model, And so you find really smart CFPs, and they're just not great. I mean, they're not out there hustling. They would much rather be studying different things to give better advice to their clients. And so it's like, for us, let's figure out a way that we can be the rainmaker, and so that advisors can have, continue to grow as much and as fast as they want to grow. But then some other advisors, all right, well, I have a certain amount of clients, and I want a lifestyle practice. I want to coach the kids' baseball team. But then by all means, the firm is going to continue to build and grow, because we'll continue to hire advisors and fill them up to hit the numbers that we want to hit. So, from a marketing perspective, we look at it, and what we've done and what we've built, and that was the mindset from day one, though, right? And so we knew that we were going to be in the hole for several years. We didn't see a profit for, at least 5 or 6 years, it seemed like. We're just kind of breaking even because of the infrastructure that we built. Trying to cater to the mass affluent, it's like you got to get volume in, and you've got to get it quickly, to continue to pay the bills. And then you look at our business development team, the ones that are on the phones and all of that. So I could see why a lot of companies are like, man, that's a pretty big expense back, because you go broke doing this because you don't see your ROI for at least another 12, 18, 24 months, depending on what type of marketing that you do. we try to get our payback, from a dollar spent at least within 12 months. But some of the stuff that we test, it might take a little bit longer than that. But once you get the motor running, once you get that machine going, and then then you got something really cool and special.
I think to your point, the fact that that was your choice from the beginning and you had conviction around that choice and you stayed invested, even though you were just breaking even, was just, it gave you an advantage that other established firms, it would be difficult for a firm that has an economic model that works, that has a history of compensation and like what the owners are taking home, to sort of go back and do that and start to make those investments. It would be a totally different environment to be operating within. And so, I mean, just, such a smart and intriguing decision to make from the onset. I want to talk a little bit more about the training and you mentioned the career path for CFPs, and you've talked a lot about, how you work with those CFPs at your firm in a very different way. Currently, I'm the chair of the CFP Board's Workforce Development Advisory Group, and our job as a group of volunteers is to work with the CFP Board to create a more robust and diverse talent pipeline of CFPs coming into the profession. And that's one of the things that we hear consistently. There's just such a big disconnect between interested CFPs coming into the profession and opportunities for them to work, because a lot of what's out there is sort of that eat what you kill model, and not everybody wants. That's just not everyone's desire. And so I applaud the work that you're doing to develop differentiated career paths for CFPs. You just don't see it as often in the RIA space. You see it a bit more in the captive model. So what's the approach? I mean, I get and understand the ability that Pure has to be the rainmaker at the corporate level and to give them a funnel of qualified leads. Are there other, so is it training on the job? Like, is that sort of the focus, or are there other components to career pathing and training that you offer to the CFPs that you hire?
Yeah, I think it starts with how do we train them right out of school? So even at the intern level to the entry level opportunities, we have a dedicated financial planning department that are either CFPs or on their way to getting CFPs. And thankfully, we've got San Diego State here locally, who's really big on the financial planning program. So we get people who are coming right out of school with a CFP or about to take their CFP test, but they lack the experience. And so what happens is we've built a 25-person financial planning and tax team here, where they're really cutting their teeth on financial planning strategies and topics, where they learn what's in the textbook, but then you got to apply it to real life. And so they're spending 3, 5, 7 years in our financial planning department, cranking out 3 plans a week, right, because of the volume that we're running. And so they're getting a lot of at bats and looking at a lot of different situations. I mean, you could put up one of our 25-year-olds that has been in that department for 3 years up against somebody who's been doing it for 15 years because of the volume that we're running. And so they really get boots on the ground training from a technical standpoint. And then it's, how do I apply this to being in a conversation with a real client? And what are those kind of trade-offs that I need to work through with a client? What's going to motivate a client to take action? And that's where there's a whole other training program when somebody decides, I want to go from being a financial planner to a financial advisor. We put them through an entirely new training program to get them up to speed with how to serve clients, how to have those conversations. And so there's a whole career path that we are helping to build and providing that opportunity for those CFPs. Again, because they might have different skill sets. Somebody might be really good, come out of school, and you can put them in front of a client, but they wouldn't know what to say because they don't know anything about tax or financial planning. And so they've got to learn that, and vice versa. You got a lot of really smart, technically sound people that need to really hone their skill set on getting in front of clients and motivating them to take action. So we're trying to train both types of candidates in our model.
Yeah, I think that's what's missing so much today. Like the wirehouses don't have the training programs anymore. Even some of the captive agencies, even though you're captive and you're not selling great product, it still had a good sales background, right? And so we have a couple of different career paths that we created for our CFPs. So if they come into our planning department, and they don't necessarily want to be client facing. They like to do the research. They like to do the heavy lifting. They like to come up with the ideas and the strategies and work hand in hand with our advisors. We have career pathing there that they start with as a support person, then they go to a strategist, senior strategist, then a lead, then a manager, and so on. So they can continue to build and grow their career just in that overall department now. As Jason said, we brought in 1,500 new clients. Last year, we'll probably bring on 2,000 new clients this year. Everyone goes through a financial planning process. We charge for the financial planning up front. And so they're very, very busy within that department, and they can see so many different cases and so many different alternative ways to solve. So from a textbook perspective, they're great, but then it's like, all right, how do you present this to a client? How do you motivate the client to take action? How do you motivate that client to make sure that they're going to take the advice that you come up with? Even though it's sound advice, how are you going to explain it? You want to do a Roth conversion, but it's going to cost $50,000 in additional tax. Most people don't want to necessarily pay a lot of money, especially more money in tax. So what is the strategy, and how do you go about, carving that story? And so we have career pathing there to get them into the advisor chair. From an advisor perspective, so if someone comes to our firm and let's say they have 50 clients to zero, so we're still building, we have classes every day of the week. So Monday we have just a kind of a financial planning class that they're working with our chief financial planning officer to say, here's how you, not necessarily, here's how you do financial planning, but how do you work with the financial planning team? So how do you submit the overall strategy so we don't have to go back and forth 100 times? On Tuesday, we have 2 hours. That's case design. That's also kind of like a quote-unquote sales class. How do you motivate the client to take action? What ideas do we have? How do you make sure that they move forward? On Wednesday, we have a full tax class where our head of tax will go through complex tax returns. And then there's practice management, investment management, and so on. So we have this curriculum for our advisors to make sure that they can continue to sharpen the saw, and then they can always improve. So, and then at each stage of the advisor's life, we have different trainings for, if I already have a full book of business, so how can I add better value, or what are better ways that I can use technology, or we're testing different things out for them. So we're getting everyone super involved in depending on what stage of life that they are at. And also we have career paths for our advisors. We have different layers of management. So when I got into business, we had like these advisor coaches that would sit with me and then help me close the deal. So we do the same kind of concept here. So we have advisor coaches that will work with our new advisors, not necessarily to help them close the deal, but they do. But here, how do you work our systems and process? Because what we, if you visit an advisor in San Diego or Denver or Chicago, you're going to get the same experience. It has to be defined. Our sales process is totally defined, and we want our advisors to do very similar things. So it's not, you walk down a Merrill Lynch office, each advisor has a totally different business model. We have the same business model, so if you sit in a first meeting with myself versus an advisor in Sacramento, it's going to look and feel the same. Right? Our financial planning process is going to look and feel the same. The advisor, of course, owns all of that, but we want to make sure we control the high level of advice from a corporate level. So we have a ton of different training career paths there. So if an advisor doesn't necessarily want to have a full book of clients, they could go and get into be a district manager or run a branch or run a region and help other advisors,
cool. Yeah.
Continue to grow in the business. So I think there's just such a lack of just helping younger advisors have a true career path today. It's like, all right, I'm going to get in the business, and where am I going to go? I got to go to the custodians, or maybe I'm going to be a junior advisor to a senior advisor that says they're going to retire, but they never retire because the junior advisor's in there, and the senior advisor's just going to die in the chair, right? And so then they quit, they leave. I mean, so I think there's some flaws that we're trying to. I got a little excited there, Jason. Sorry about that.
I love that.
A
Yeah.
little bit of passion there.
I think there's things that we're just trying to solve, and it makes it a lot of fun. So.
Yeah, and I think it's hard because it's expensive and it takes a lot of time. And if you don't have the strategy behind it, you don't have the thoughtfulness around it, and you're not willing to put your money where your mouth is, like, it's great to say I want to help mentor other advisors and I want to grow and I want to do all those things. but you actually have to have a plan in place and execute that plan and be willing to spend the time and money to do it. And a lot of advisors just don't.
What Joe and Jason just described is so rare in the independent RIA space. While wirehouses abandon their training programs and most RIAs rely on sink or swim approaches to advisor development, Pure has created what amounts to a university for financial planners. This isn't just about onboarding, it's about systematic career development that recognizes different talent paths and provides genuine advancement opportunities. When Joe gets passionate about this topic, you can hear exactly why Pure has been so successful at attracting and retaining top CFP talent. They're not just offering jobs, they're offering careers. But this level of investment in human capital raises an interesting question. How does a firm maintain this culture and commitment as they continue their remarkable growth trajectory?
Just to kind of go back to your question of, all right, well, we have a game plan, and are we calculating in the back of the envelope? All right, well, we need to get to 30% growth, and what do we got to do to get to that 30% growth? It's never really been that way. We're like a vision and mission driven firm. It wasn't, hey, we need to be at $10 billion by this date. We want to be a $50 billion firm, and we want this, and this is the revenue, and here's the EBITDA, and we've never really ran the business that way. Is a lot of us came from the commission side of the world, and it was like, man, it would be really good if I could give true fiduciary, comprehensive, fee-only advice and not necessarily worry about selling products and, quotas and all of that. And so as long as there's, people that we can continue to help and advisors that are really excited about our business model, we're going to continue to build and grow this thing probably at the same clip. So we kind of start backwards. But of course, Jason's the CFO, so he's got certain numbers and he works with our capital partners, and, they probably want to see certain returns there too. But as I look at growth, sometimes growth kind of scares me because I don't want to lose the fiber that we have, that we built, and the culture that we built as well. I'm friends with other top executives and CEOs in this business that do a lot more growth than we do. A lot, not from a percentage standpoint, but just from an asset and M&A and integration. I mean, some of that stuff is like, that's just too much. Yeah, I don't know, how do you do that? I mean, you're tucking in all sorts of different types of firms and personalities and business models and things like that. Where we want to be pure, right? We're pure to the core. And I know that's got to change to some degree, or I got to change a little bit too and open the aperture. But growth is very exciting, but we also don't want to grow for the sake of growth. I mean, I think we want to have sustainable growth that's responsible, that we're not, blowing up our employees. We're not doing anything to detriment, the client experience. We want to make sure that we deliver the best advice possible and give the best client service possible. And I think sometimes if you grow too fast or too much, then you have, some growing pains and some issues that arise. So I'm excited about the growth, but I'm also cautiously optimistic.
Yeah. For me, I look at it from let's start with the organic growth side of things. I don't think there's anything that we're not doing that we're like, why aren't we doing that? I mean, yes, it'd be great to get into maybe some of the custodial referral programs. We're not in any of the custodian referral programs today. And so, yeah, maybe that's one avenue that if, given the right opportunity, we could explore that. But even that's an entirely different type of business model in and of itself, and how you go about that and the types of reps you need to go into those channels and work with the financial consultants at the retail branches. So what I think Joe and I are focused on, mainly Joe is focused on, is how do we get better and tighter on the existing channels that we're in? How do we get better at the workshops? How do we get better at driving people to our classes? How do we get better at getting leads through our business development team and cultivating those leads? And how do we get better about improving the ratios of how many set appointments we can get from the leads and how many people that actually show up from the appointments that we set? So we're focused on just making minor tweaks to the conversion ratios. So because if you look at the percentages, I mean, all you have to do is tweak a certain level of percent, 1 or 2% of each of the steps in our process, and that could lead to massive amount of AUM, hundreds of millions of AUM. If you say, hey, my lead conversion rate goes from 2% to 3% or 3% to 5%. So I think that's the focus, and using technology to be more efficient too. Up and down the line, we started using an AI company here locally in San Diego that does text messages, automated text messages to set appointments. So things like that, where again we're just focused on tweaking on the margin and focus on what are the existing things that we can do better. And of course, if there's things that come across our desk that we're like, hey, let's try that, sure. But Joe said it before, it's not rocket science that we're doing. It's not like anything we're saying here, like advisors are like, wow, they do that. It's just, it comes down to the execution.
Yeah, most of the time when we talk, they're like, oh, that's all you're doing? Really? I was like, you're doing workshops?
Yeah.
You're doing workshops. Okay, you have a cheesy TV show. Okay.
But it's the consistency, it's the persistency, it's the investment, it's the infrastructure built around it, it's the sales processes, the training, it's all of it. It's pretty impressive.
Patient reveals something crucial about sustainable growth in our industry. While most firms chase growth metrics and PE-driven targets, Pure's approach is fundamentally different. They grow in service of their mission rather than growing for growth's sake. Joe's concern about losing the fiber we've built isn't weakness, it's wisdom. And Jason's focus on optimizing existing channels rather than chasing the next shiny marketing tactic shows the discipline that separates truly successful firms from those that hit a plateau. Pure Financial represents what becomes possible when you have the courage to completely reimagine your industry. They've proven you can profitably serve the mass affluent at scale, create genuine career paths for CFPs, and build a marketing engine that is the envy of our industry. Most importantly, they've shown that the firms which grow successfully over decades are those that understand growth must serve purpose, not the other way around. So, did you like this episode? What did you learn? I'd love to hear what resonated with you from today's conversation. I hope you'll find me on LinkedIn to share your key takeaways. Or leave us a review, because ratings and reviews are always very appreciated. At FICOM Partners, we're on a mission to help advisory firms achieve the growth you're capable of. We serve as your outsourced CMO and marketing department, driving marketing-enabled organic growth through strategy, execution, and advisor coaching. For more valuable growth resources, visit ficompartners.com/insights. Please subscribe to the podcast and on YouTube so you can continue learning from other inspiring growth journeys. I'd like to thank today's guests, our producers at Podpony, production assistant Molly Spina, and my most amazing executive assistant, Kristen George. This is Meg Carpenter, CEO and co-founder of FICOM Partners and your host of Growth Leaders of Wealth Management.